From a Raytheon's perspective, you're absolutely correct. We do not sell any products to China, so we're not impacted by any of this tariff issues with China. In terms of steel tariffs and aluminum tariffs, most of the steel and aluminum products that we buy are from U.S. companies, so we're not impacted by that either.
Are you at all concerned that what seems to be flaring tensions with some of our allies, Canada, Europe, et cetera, that could impact demand for some of your products?
Well, it turns out the reason that these countries are buying our products is to protect their sovereignty and the freedom of their citizens. That's still at the highest priority level. And we have the solutions to essentially solve that problem for them. And so they come to us for these solutions irrespective of tariff issues and other kind of political situations.
It's interesting to hear you say that, because over the last couple of months we've seen defense stocks, including Raytheon's, sell off in this broader sort of industrial stock sell off on trade war fears. But it sounds like you're saying that you're pretty insulated.
We are insulated because if you go to Europe, you find out all these European nations are now significantly increasing the percent of GDP that they're putting into defense systems, and the main reason is they're concerned about Russia and what they did in Crimea. If you go to the Middle East, big concerns there relative to deterrence against Iran, so they're continuing to buy our solutions. And if you go even over to the Asia-Pacific region, despite the fact that we are working with North Korea and trying to drive that to a peaceful solution, there's a stronger concern out there relative to China and being able to protect their sovereignty and their freedom of their citizens relative to China. So there's still a significant demand even in the Asia-Pacific region outside of North Korea.
And going back to North Korea for just a moment, the fact that these talks seem to be moving forward, we don't have a lot of details yet. How do you expect this to play out?
Well, I think it's going to be take time. This is not going to happen overnight. We're going to have to be very patient. And we're also going to have to realize that in the past we were not successful and understand why we were not successful. I think in the end game, there's still going to be a significant demand for deterrence. We're going to want to make sure that North Korea stays on the path that they agree to, and I think they're going to have a significant deterrence in that region to essentially ensure that North Korea doesn't back off of their word.
Of course, we're seeing increased defense spending really across the globe right now. Some folks in this industry have actually pointed to what they've called a Trump effect. Have you seen that in terms of our allies and their spending?
Not only have I seen that, leaders of these nations have asked me, what does the president think if this percentage of our GDP goes against defense? What do we need to do? What do we need to show this administration that we're supporting them in terms of being a coalition partner in our spend on defense products? So it's there. It's real. It's not something that's just written in a paper. It is real. These countries are taking it, and we're seeing that in Europe. We haven't seen that in Europe since the Berlin Wall came down. Countries, for example, we just are closing on a deal with Romania, Poland. Sweden is close to closing on a deal relative to the Patriot. This is all happening here in the last couple of years. And the bottom line is each one of these countries is on a road path to essentially meet the NATO requirements of 2% of their GDP, even though some of these countries are not even in NATO. And so we're seeing it in Europe, we're seeing that in the GCC, and we're also seeing it in the Asia-Pacific region. Just came back from Japan a couple of weeks ago, and Japan is also increasing their percent of defense spending relative to their GDP.
And of course, Saudi Arabia.
Yeah, Saudi Arabia. And we've been in Japan for 51 years. We've been in Saudi Arabia for 51 years. And so this is obviously our potential and outlook is very positive in all those three regions. And domestically, the budget's up 19% year over year. So we think it's the best time that we've ever seen in a long time for the defense industry in terms of outlook. And we're very optimistic.
International sales, increasing piece of the sales pie for Raytheon.
That's correct.
Given the fact that this administration is making moves to streamline the regulatory process to ease export controls, how does that play out for you?
First of all, we haven't had an administration in a long time that's been such a strong supporter of international sales. That has significantly helped the defense industry, and especially, I think, the overall aerospace and defense industry, one of the largest employers in the United States. And I think that's going a long way to help our industry grow our international sales. For example, Raytheon's revenue in terms of international is about 32% and growing. So we feel very optimistic about the outlook for international sales moving forward. We have the right solutions, we have the right price points, and we have the right relationships with all these countries worldwide.
Looking out over the longer term, over the coming years, what would you expect international to be in terms of sales mix?
Well, we'd like to grow it to at least 50% of the company, and that's our big goal moving forward. We're not stopping at 32%.
Consolidation. Want to get your thoughts on it? We've seen it in the broader defense sector recently. Northrop Grumman recently closing on Orbital ATK. Got General Dynamics buying CSRA. Are you on the prowl?
I would say we're always on the prowl. I mean, that's part of any business. You're always looking at your portfolio either way, either to exit businesses or to bring new businesses on. The main area here is setting a strategy and trying to figure out how you execute that strategy and determining where you have gaps in that strategy, and then use mergers and acquisitions as essentially a tool to implement your strategy. So when you ask me a question about are we on the prowl, I would say we actively look to see if there is a company out there that we could work with in some way to essentially increase our top line and drive margin expansion in our business.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.